Well, in Rich Dad Poor Dad, I came out in 1997 and I said, your house is not an asset. And it drove people nuts. It just went crazy on me because it's a common belief. But when you can't make your house payments, you find out it's the biggest liability you got in many of the times.
It's turned out to be very much more correct than you even thought.
Right.
When you look at what's happened to home prices.
Right. And Donald and I love real estate. I love real estate. I think it's the best thing going, better than sliced bread. But if you're not smart with it, it's like a loaded gun. You can protect yourself or you can kill yourself with it. So real estate is, to me, the best vehicle, but you've got to be smart with it because we're using debt. And debt is the two-edged sword out there. So you use debt, I use debt, but the more debt you use, actually you have to be smarter. So you can use debt to get richer. You can also use debt to wipe you out. So that's why I continue on saying we need financial education. To just say to somebody, get out of debt, well, that's not accurate. You use debt, don't you?
Debt is a great thing, and to be big and to be very successful, debt is a very useful weapon. But you have to be very careful.
That's correct. So the other thing when people say live below your means, you don't like to live below your means, do you?
No.
And I think when you say to somebody, live below your means, you wipe their spirit out. It's like saying somebody, if you want to lose weight, go on a starvation diet. It doesn't make you healthier to starve yourself. So I would rather get financially educated. That's why I read your books, because this is my greatest asset. I want to feed my brain so that I can expand my means without getting into excessive debt or where I start to lose. Because debt, like I say, is a two-edged sword. But telling somebody to live below your means is almost inhumane. I never felt good doing it. I wanted to strive to do better every day. I want to do better every day. I liked a good life. Like I tell the story of taxiing underneath your jet. I was in my jet, but it was a little Learjet. And I look up and there's a 727 and I taxi under it. I said, holy mackerel. It's big boys and their toys, but nonetheless, it inspired me. I said, okay, I'm in a Learjet now. It's time to step up. And it doesn't mean the jet will make me happier. What makes me happier is the wanting to get better, to get smarter, to do better.
Well, I have a friend who was not successful at all, but was really up and coming. And he had a thing. He would only fly first class. I'm not saying do this because for somebody it won't work, but he needed that mentally.
Right.
He wanted to fly first class because mentally he wanted to think he was the best and that's it. And even though he didn't have much money at the time, this is years ago, he would always fly. I used to criticize him, but it put him in a good state of mind and he became a very, very successful guy. Very, very successful. And I've always remembered that. He would never fly coach. He would always fly first class, even though he didn't have the means to fly. So, look, it's complicated, but whatever it takes to train that.
Whatever makes you feel better about yourself, stronger, more confident, to want to do better. And I think really that's the issue. And we're at the stage of our lives right now, to ask for more is not really it. But to do better, to feel better about ourselves is still important. It is very important.
Right.
So that's why I don't like saying live below your means and scrimp and all that, because shopping is fun. Nice houses are fun.
At the same time, you have to be very careful.
Yes, but you have to be responsible about it.
Correct.
Like, when you invited us up to your little duplex up here, whatever you call it. We walked up there, and I've never seen a two-story, entire floor home in New York City. And my wife Kim says, I never really want to live in a condo, but she says, Mr. Trump's house will do. And it is spectacular. You know what I mean? And it's...
I don't need that, Robert.
Yes, I know.
I don't need that. If I had one nice bedroom with a good television set and a nice bed, and you don't really need that. But it was in a building I built, and it was there for the taking, so I figured I might as well do it. And what have I done? Instead of selling the equivalent of 12 or 13 units, I kept them. And by keeping them, I have them. I didn't sell them, and that's okay. And it's become, a very valuable place. So I didn't need that. I don't need it now. but there's something nice about it.
Right. And then that's my message is achieve it, and then you can take it or leave it. But if you don't achieve it, then it's always something away from you. So again, that's why I'd be redundant about this, living below your means. I don't think that makes your spirit happy. It kills your spirit. Also, if you don't have the financial education, when somebody says your house is an asset or these mutual funds are good or the stock will go up, and you don't know the difference between a good investment and a bad investment, because real estate can be a bad investment, stocks can be a bad investment. If you don't know good investment advice from bad investment advice, then you're going to get taken. This world is not kind, should we say.
The hardest thing that I've witnessed over the last year is seeing people that were very hardworking and very conservative that invested in the stocks. And I'm not talking about high-flying stocks. I'm talking about very solid companies. And their net worth is 50% of what it was a year ago, and they haven't done anything wrong.
Right.
Now, they put their money in stocks, so I guess you could say that's wrong, but it's really not wrong because historically that's been okay. Right. So they went into conservative stocks, and a year later they're worth 50%, and all they've done is worked. And that's the hardest thing I've seen.
It's tragedy. The thing that I want to say is this: you can invest in gold and lose money. You can invest in real estate and lose money. You can lose stocks and lose money. You can invest in oil and lose money. You can also make a lot of money in all those things. So really the reason we get together is because your financial intelligence, your financial IQ makes something valuable or not valuable. Like I said, you have to know a good investment from a bad investment, good advice from bad advice.
Robert Kiyosaki and Donald Trump, both renowned for their expertise in finance and real estate, engaged in a conversation that delved into various aspects of financial success. Their discussion highlighted the importance of financial education, the role of debt, and the mindset required to achieve financial independence. They shared personal anecdotes and offered insights based on their experiences, making the conversation both informative and engaging. Kiyosaki began by challenging the conventional belief that a house is an asset. He explained that many people discover their house is actually a liability when they struggle to make mortgage payments. This perspective, though initially controversial, emphasizes the importance of understanding the difference between assets and liabilities for achieving financial literacy. Kiyosaki argued that recognizing a house as a potential liability is a critical step toward making informed financial decisions. Both Kiyosaki and Trump expressed their preference for real estate as an investment vehicle. They believe it offers tangible value and stability compared to other investments like stocks or bonds. However, they emphasize that real estate requires careful management and financial education to be successful. The conversation revealed their shared belief that real estate, while potentially lucrative, can also be risky if not approached with caution and knowledge. The role of debt in building wealth was a significant theme in their discussion. Kiyosaki and Trump both agreed that debt can be a powerful tool when used wisely. They highlighted the importance of being financially educated to leverage debt effectively. Debt, they argued, can either enrich or bankrupt an individual, depending on how it is managed. This nuanced view of debt, as a two-edged sword, underscored their belief in the necessity of financial intelligence. Trump shared his perspective on the often cited advice to live below your means. He argued that this approach can be demoralizing and limiting. Instead, he suggested that people should focus on increasing their financial means through education and smart investments. He likened the advice to live below one's means to telling someone to go on a starvation diet to lose weight. Neither approach is healthy or sustainable in the long term. Kiyosaki echoed Trump's sentiments, emphasizing the importance of striving for a better life. He recounted his experiences of wanting to improve and achieve more, which he found motivating and fulfilling. The discussion reflected their shared belief that personal growth and financial success are closely linked. They encouraged individuals to pursue their ambitions and expand their means rather than settle for less. The conversation also touched on the importance of confidence and mindset in achieving success. Trump shared a story about a friend who always flew first class, even when he couldn't afford it. This habit was criticized by others, but it helped his friend maintain a positive and confident mindset, which eventually led to great success. This anecdote illustrated the psychological aspect of wealth and the importance of believing in oneself. Kiyosaki and Trump discussed the dangers of relying on conventional wisdom without proper financial education. They pointed out that many people invest in stocks or mutual funds without fully understanding the risks involved. The conversation emphasized the importance of distinguishing between good and bad investment advice. They warned that without proper knowledge, even seemingly safe investments can result in significant losses. The discussion also highlighted the value of resilience and adaptability in the face of financial challenges. Trump spoke about the economic downturns that affected many conservative investors who saw their net worth plummet despite investing in stable companies. This observation led to a broader conversation about the unpredictable nature of the market and the importance of staying informed and flexible. Kiyosaki emphasized the role of financial intelligence in determining the value of an investment. He argued that the success or failure of an investment often depends more on the investor's knowledge and decision-making skills than on the investment itself. This perspective reinforced the importance of continuous learning and self-improvement in achieving financial success. The conversation underscored the importance of having a clear financial plan and strategy. Both Kiyosaki and Trump stressed the need for individuals to take control of their financial futures by setting goals and working towards them. They encouraged listeners to think strategically about their investments and to be proactive in managing their finances. Kiyosaki and Trump also discussed the role of passion and enthusiasm in pursuing one's goals. They agreed that having a genuine interest in what one does is crucial for long-term success. The conversation highlighted the importance of finding a balance between work and personal fulfillment. They encouraged individuals to pursue careers and investments that align with their passions and values. The importance of taking calculated risks was another key point in their discussion. Kiyosaki and Trump both emphasized that achieving financial success often requires stepping out of one's comfort zone. They discussed the value of taking risks in business and investments, as long as those risks are well considered and based on sound financial principles. The conversation also touched on the significance of mentorship and learning from others. Kiyosaki and Trump acknowledged the impact of their mentors and the lessons they learned from them. They encouraged listeners to seek out mentors and to learn from the experiences of successful individuals. This advice underscored the value of networking and building relationships in the business world. In conclusion, Kiyosaki and Trump's conversation provided valuable insights into the complexities of financial success. They emphasized the importance of financial education, the responsible use of debt, and the right mindset. Their discussion encouraged individuals to take control of their financial destinies, pursue their passions, and continuously seek knowledge and improvement. The conversation served as a reminder that achieving financial independence is a journey that requires dedication, resilience, and a willingness to learn.